All right, what's up, everyone? Welcome to the 2025 Ask Me Anything by the BYOB Money Mentor team. We're happy to have you here. We're here to answer all your questions about infinite banking, becoming your own banker, anything on finance, maybe we get into sports, we can do some MMA talk. We got a couple black belts on here, or some color belts. Of course, we have the whole team here ready to go. So get your questions in, and we'll be right back to do some introductions and answer all your questions. Be right back. All right, what's up, guys? Thanks for being here. Welcome to the first 2025 Ask Me Anything happy hour, where we answer all your questions about infinite banking, becoming your own banker, and everything else. So I'm Stephen Nagy. I'll be kind of your pseudo host for this Ask Me Anything here today. I'm actually at a hotel here in Buffalo, New York, up here visiting Mr. Chris Naugle, Shauna, and the Private Money Club BYOB team. We have a meetings the next couple of days. So hanging out, trying to stay warm right now. It's nice and kind of snowy outside and cold, but the show must go on, so we're here for you. So get your questions in. We'll answer all those. And in the meantime, we'll go around the horn and do some quick introductions if you're new here, so you know who you're talking to. And we'll have some fun here over the next hour. So thanks for being here. What's up, Shauna?
Nothing. I'm also up here in Buffalo. I live like a half hour south, and I've got more snow out here than Steven's got out his hotel. But happy new year. Was on the Wealth Wednesday webinar today and saw a lot of good things in the chat. Some new people, some people who've been around for years, and some people who were sharing what IBC and everything has done for them. So feel free, if you don't have a question, to just share some good news that's going on in your life too, because we love to see it. So I'll pass it over to Brian.
Hey everybody, Brian Fouts here, up in northern North Idaho. We got a couple feet of snow up here, actually. Pretty cold, and more snow coming every day, it seems like. But yeah, my whole family, I actually had the influenza, the flu, a hardcore flu over the holidays, Christmas, New Year's. My voice is finally coming back today. But up here in northern Idaho, helping everybody out. But I'll pass it on to Craig.
And good afternoon, Craig here, and I am living just south of Denver in Castle Rock, Colorado. And like, Stephen and Shauna shared, we have a little bit of snow outside finally, but it's been kind of it was a dry December out here in Colorado. For those that live out here, you know what I'm talking about. But anyway, we had a great wealth webinar today. And, one of the things we don't do on Ask Me Anything is just ask people that are here, is this your first time being here? So it'd be kind of fun. Just throw in the comments if this is your first time being here. Just say, I love to see how many people show up for the first time. Other than that, we're ready to answer your questions and have a lot of fun in the next hour. So I'm going to pass it on to Carson.
What's up, everybody? Carson Herline out in Southern California. If you've seen the news, there's a ton of crazy bad fires right now in LA County. I'm about an hour south of that, luckily. But it's crazy. It's all over the news over here. So that's that. I mean, it's January. There's no snow and it's 70 degrees. But instead of it being sunny, it's kind of ashy from all the fire. But we're doing good. Ready to start the new year strong. I got some big goals this year. We're ready to hit them and teach people IBC, banking, and change lives. So this is our first AMA of the year, guys. Thanks for hopping on. Passing over to Jay.
Awesome, Carson. I'm glad everything's safe with your family. And it's actually chilly here in Florida, Snaggy. So it's, in the 40s today. It's not Buffalo weather. And I was trying to figure out what looked different about Snaggy. He's no hat on and no beard now. It's like changing up the look. So happy New Year, all. Grateful to be here in the city. Beautiful, like I mentioned. It's cold. The cold plunge is colder. I'm on day 42. So keep that going forward. Some days you really don't want to go in. Some days it's easy. So just like anything, just building that habit of going in. And curious, if you pop in the chat, what's a habit that you're looking to create for yourself this year? Maybe not a resolution, but what's a habit, something that you're working on that's going to help you be your future self to reach your goals, whether they're financial, personal, freedom, whatever it might be. And quick fun story before I pass it down to Gabe with that big beard is Gabe and I shot our 9th week of our IBC Black Belt Boot Camp. and somebody, we won't name any names, messed up and didn't record it. So next week we're gonna redo it so we could have the whole series on my YouTube channel. So down to you, Gabe.
Hi, everyone. My name is Gabe Rotana in Newmarket, Maryland. I've been practicing infinite banking since 2019. I'm a jiu-jitsu school owner and black belt in jiu-jitsu, and I teach beginners what can be a very complicated martial art that's actually very simple. And we try to apply that to infinite banking. It's very simple once you start practicing it. Some people can overcomplicate it, but luckily we all practice this, and this is how we conduct our finances. So we're here to help, and I'm always happy to be on. And I usually learn so much just from listening to you guys, because you guys are talking to clients every single day.
It's awesome, Gabe.
Yeah, 100%. I do see, Craig, thank you for asking that question, because there are like several people who this is their first time joining us for Ask Me Anything. So yeah, we're here every Wednesday, 4:30 Eastern to about 5:30 Eastern. Sometimes we start 5 to 8 minutes late, but we'll usually stay 5 to 8 minutes late for you too, if that's the case. So come back every week, and we really just try to be there for you.
Yes, welcome, David. Welcome, Lisa. 2 new eyes. Anyone else? Pop them in there. We'll acknowledge you too.
Yeah. Okay.
Hey, Lisa, we're beginning tomorrow, Lisa.
Justin saying a habit I want to do this year is go with the flow and not be as tense with stuff that's out of my control. That's mine too, Justin. And Jason, mine was water, which you reminded me I needed to grab a glass of water.
That's awesome. And while we got a question. I was going to say, here's something I'll offer everyone really quickly. Think of 3 words that if you use those words or you live by those words, they would change your life for the year. I started this, I loved what was just shared, because a couple of years ago, I was driven by stress. That was like my go-to drug. So my 3 words for 2022 were easy, effortless, and abundant. Last year was adventure, impact, and I had to add patience. This year it's patience, empathy, and fun. So you'll find yourself reminding yourself, rather than trying to accomplish all these things, if you have a word and just, oh yeah, like earlier someone got on a call and they thought we were talking about trust. I'm like, I am empathetic. I'm here to support the person rather than being judgmental. Like, what do you mean you're not here for BYOB? So just an idea. What is that?
Who's got an access code or a phone going off? Thanks. Yes, Jason, I love your 3 words, and you got me committed to my 3 words this year too. So we'll start with our first question. Derek Olson is saying, I plan to buy a home in a couple months. I would like to know if I should pay off my debts with cash or if I should use infinite banking concept to pay off the debts.
What a big softball. Here you go, Carson.
Imagine if you could have asked that to Dave Ramsey's show right now. That would be hilarious. They would tell you, yes, to pay it off with cash. They'd give you a whole story of how stupid it is, the infinite banking concept. But I'm glad you came to us to ask this question, because we can prove to you with math why it makes more sense to run your debt through the policy before paying it off. I think that's a fantastic idea, Derek. Let us know how much debt there is, what kind of debts they are, how much cash flow you have, what you're looking to dump into the policy to pay off the debt, and we can build you a model and a plan to really take action on infinite banking. So 1,000%, let's do it. Reach out to our team, schedule time with one of us, and we'll get you moving.
Yeah, absolutely. And then so for anybody who wants to know, to book a call with our team too, I'm trying to look, I'll put the link in the chat, but it's mentors.beyourownbanker.com, and that'll get you a call booked with our team.
I think one of the important things to stress about that question too is a thing called opportunity cost.
Yeah.
So if you were to take that cash and go pay the debts off, you now have lost control of that money for the rest of your life. And what we teach with infinite banking is by taking that cash that you would have paid the debts off with, you're going to put those in your policy, which will compound and grow for the rest of your life, and then use it to pay those debts off and recapture back into the policy. But that's something when you get on a call with our mentors, we can certainly, deep dive into. But I think the important thing just to walk away with is just start thinking about the opportunity cost of your money. Every time you have a dollar in your hand and you spend it, it's gone. We just want to do one thing differently with that money before you spend it, and that's to put it in our own banking system and then go do whatever you're going to do with it.
That's perfect.
Exactly right.
That's tomorrow's webinar. I'm going to do the hidden costs of financial decisions, basically talking about opportunity costs. Like if you pay for something in cash, the easy question is, will you ever earn money on that money again? What's the answer? No. But if you put it in a policy first and you have the cash value, now it's growing forever in one hand, it's protecting your family, and you're using it. You've just done 3 things with the same dollar.
Yeah. Imagine how much interest you are giving up by spending the money. You got 10 grand of credit card debt. You spend that 10 grand now. What is 10 grand at 6% for 50 years? Probably hundreds of thousands of dollars you're losing by spending it to pay off your debt. Run it through a policy first and capture both.
It feels so nice. I've done good things with my policies and reckless things with my policies. I bought my child a go-kart and we've gone to Disney too. But I have paid off debt too. So it always just feels like you're spending it better that way.
I actually just did that. I finished off paying debt with my policy and bought a house. And once you pay off the debt with your policy, it's not going to come up in your credit report. So it's not going to affect your debt to income ratio about the loan that's outstanding as far as your policy loans. So you don't have to worry about that.
Yeah, that's actually a huge thing. That's a huge thing. Thanks for bringing that up, Gabe. Yaniri is saying, hi, first time here. Happy New Year. Welcome. How should I write my promissory note about the money I lend to my business?
Well, that's kind of a legal question first off, but
For a little disclaimer up.
yeah, a little disclaimer there for sure. But so I mean, the way I've done it before is, this is just my personal experience. Is I just created it's kind of I think it was 1.5 page promissory note. I found a template online, made it very simple. It was from me personally to my business LLC. I signed both sides of it because I was the manager of the LLC, and there we go. And that just allowed me to put in terms what I wanted the note to do, and then for my CPA, I just give them that note and the payment schedule, and then they use it for the taxes in the back end. So, but yeah, that's how I've done it. Just use a simple promissory note, 1 pager, just to document it.
Same.
Thank you, Phelps.
Okay. Navigate Your Ventures, which I believe we remember that Shane, right? So I had great series with Jason and Gabe. Founding Fathers helped me see their own case studies. Very helpful. Shout out you guys.
Yeah, Jason, share those. I haven't seen it. I didn't even know you did that. Send us the link. We'll watch it.
Yeah, it's all on my YouTube channel. We made a called a playlist. So episodes 1 through 8 are in there. 9 because again somebody screwed up and didn't record it.
Damn you, Gabe.
Didn't get it right, and I mean it wasn't that guy. It was this guy. We gotta do it.
Jason, you got 500 subscribers now, bro. That's awesome.
Yeah, thanks, man. Patty's been pushing. Well, I was gonna post when Chris put. I got 60,000. I'm like, oh yeah, Chris, look at this. Got 500.
500 more than me, Jason. So you're doing great.
Week 1, 2, 3, 4. Week 8 is posted. Is that the latest one?
No, the latest one's the one that's now a mystery. It's never been recorded.
It was so good it didn't get recorded.
It was so good. It was the best one, I think. So.
Oh, goodness. All right. David, same question. How do multiple loans work on a policy? I have an existing balance and was wondering if I take another loan out, how would they pay back? How would the payback work if the interest is different? That's a good point too. Like if his first loan was at a different interest rate and now maybe the carrier changed the rate, so it's coming out at a different percentage right now.
Well, that different rate would apply to the current balance of the policy from that anniversary moving forward. So like if your anniversary is the first of the year, last year 2024 would be at 5% per se, and then the balance moving forward from 2025 would be at the new rate. So if it was 6%, now it'd all be 6%. So if you add another loan on the existing loan, it's just at whatever the current rate is. So it just adds to it.
Yeah, I mean it's like a line of credit, like a HELOC.
Yeah.
Similar type of loan of taking a balance, paying it back, pull out more. It's all liquid and flexible to you. So very similar to a line of credit.
Learn something
Right.
every day. I wasn't 100% clear on that either, so that's good to know.
And then Brent Burdick was just bringing up, hey, just an FYI, One America is holding deposits for 10 days before they will process loan now. Do you guys know what about that?
I think he means when you're paying back your loans, that when they receive that money, then to take another loan, it's going to be a 10-day window before you can do that. Brent, let me know if that's what you're talking about.
I wasn't sure if it was that or if it was also applying to premium deposits as well.
Is that what they were talking about? That's what I was thinking.
I don't know, Brent.
Well,
Yeah,
no, he said loan when they process a loan now. So I think Jason might be right. Like, let's say you paid it back and you want to take it again.
I asked that question not that long ago from a policy services member. I was just asking, like, hey, if I pay back this whole loan, because someone else had asked me this question, I didn't know the answer. I was like, how long does it take before I can access the money again? They said typically 10 days. So that's what it kind of thought that was the same thing that Brent's talking about.
Gotcha.
So Brent says both, but what I would say about this is if you're paying back a loan and then you want to take the money out right away, why did you pay back the loan? So there's really no benefit to paying the loan off and then taking a loan right away because you're not really making any progress on interest. But if you're putting new premium deposits in and you want to take a loan from that, I could see that being 10 days. We always say within 30 days. So that's kind of how I would look at it. If you're paying back a loan just to take it back out, I wouldn't pay it off.
All right. I'm going to go to a comment real quick. So Pansy Sleep is saying, this is interesting. I actually got my insurance license wanting to better understand IBC. They didn't really cover it enough to understand. And then
that's true.
From there, I think we can use Evelyn's question maybe to go over all that. So Evelyn's saying, can you explain how to use infinite banking to grow a real estate portfolio? Like, how do I get started? Also, can you set up a policy for my little kids? And do I need a lot of money to get started?
Oh, you can spend the excellent question, Evelyn. I'm going to go over to my man to Carson, who the best video I saw this week was him and his beautiful wife Anna talking about all their structures and honey, how many structures do we have? Oh, 20. No, not 20. We have 10. But Carson's very involved in real estate, so I think it's a great place to start with this question. So
we'll hit the first question first, Jason. I'll answer the second.
We can do the little kids. I'll take that question first. So
no, wait, wasn't there a first question, Shawnee? You showed it?
No.
Oh, maybe.
Yeah. There was a question before this one.
Oh yeah, this one. Yeah.
It's a statement. Yeah. Oh. Yeah. They don't cover it on the licensing. Yeah. That's true.
No, I was curious, like if she was working for a company when she said they didn't really cover it enough, because I don't remember them covering it all.
You're talking about her license. So when you go through the licensing process,
in your licensing process, they never talk about infinite banking.
No,
right? No.
They just say like what a cash value is probably and what a loan is, and that's it.
Yeah.
Because infinite banking is outside of the licensing, right? So we always say it's a concept that's outside of the policy, generally speaking. So yeah, they don't cover it.
So I would just add one thing for, I think it was Pansy that asked a question. One, you can read this book.
Yeah.
So this is by Nelson Nash, and also the Nelson Nash Institute has a specific training program for infinite banking. So if you're an insurance licensed person, then you can go take the course there, and you'll learn quite a bit about infinite banking. So that could be a path for you. And then, all the things we teach every week. There's the wealth webinar every Wednesday. There's Take Back Control Tuesday. And Sean, I don't know if you want to put the link in for the BYOB tree that we have all the different shows in. But that's what I would say is, you're going to get your life insurance license. They're not going to say anything about infinite banking. It's all about life insurance. And then infinite banking is about using life insurance for paying debts off, investing, major purchases, those types of things.
I like to tell people we are banking professionals. Yes, we're licensed insurance agents, but like we're not here to just like sell life insurance. I feel like we're banking coaches and banking professionals. It's two different worlds.
100%. So we want to dive into an example of how to use infinite banking for real estate, and like
Yeah.
just specifically getting started. Maybe like your first use case, Carson.
Yeah, how to use infinite banking to grow real estate portfolio. I mean, infinite banking is not really going to help you build a real estate portfolio. It's just a more efficient way for you to spend your money. If you're going to put a down payment on a property, it's more efficient for you to pull from the policy to fund the down payment than from a savings account. But because you have a policy, that doesn't mean you're going to be able to buy 2 properties instead of 1. So it's not like the infinite banking makes you grow real estate faster. It might just be a better way for you to store your money for 10, 20, 30 years long term. By running those properties, those down payments through a policy first, it's going to be very beneficial, but not something you're going to be able to like scale a real estate business right away because you have a policy, if that makes sense. I know it's probably not totally your question, but I want to start with that. And in terms of like how you would use infinite banking to buy rentals or invest in real estate, whatever it is, I would just, depending on what type of real estate you want to get into, whatever money you need to do that transaction, I would use a policy to fund it. If it's a down payment on a rental, if it's a down payment on a flip and you're going to get profit in a couple months, or if it's a long-term or short-term rental where you're going to produce cash flow, you can use the cash flow to repay the policy, or wait for the flip to repay the policy to then go do more. If you're familiar with the BRRRR method, where you buy, you rehab it, you refinance the property, and then you rent it out. When you refinance it, you can then just repay the policy then too. So, and then reuse the money to go buy more. And that's the model that I actually do is the BRRRR method. I use my funds to flip a house, rehab it, refinance, pull my money back, and then go buy more and hold on to that rental and keep it as a long-term rental. So there's like all kinds of ways you can be in real estate. So no matter what you're going to do, if it's lending or actually purchasing the properties, I would run whatever those dollar amounts are through a policy first.
Doing the and method rather than the or, right? Because if you go out and just do real estate or crypto or this or that, we talk about this often. But with infinite banking, it's more abundant because it's an and. You're doing, now I have it growing forever, and I'm using it to do all the things Carson just said. And I'm using it to do rehab, and I'm using it to do a flip, and I'm using it to do this, and it's growing in this hand and protecting the family at the same time. And then as far as the little kids policies, the answer is yes, but then they're going to be reverse engineered. Like Carson said, we're basically professional helping you set up your banks people, where you're going to reverse engineer it based off how much insurance do you have on your body or on your spouse's body, and then up to half of what they're insured to, up to $1 million is typically how we will reverse engineer. Or if you had a certain number for how much you want to put into your kids policy, like a certain amount you're saving for it, then we'll look at that. But it's always reverse engineered with the goal of what you're trying to accomplish in mind. And so do you need a lot of money to get started? No, but you do need to save and make sure that you're paying yourself first. So recommendation would be 10% of whatever you're making is what you should be paying yourself. We always say it's 10 times your age. I rather say it's 10% of whatever you're earning. So you're at least making that contribution and following what the wealthiest families have been teaching us forever. So.
Yep, I like that.
The other thing I would just add, Evelyn, to the real estate part of this is we teach a lot about being in control of your money. And so one aspect of that for real estate is if you have your own banking system and are using your own money to fund these real estate projects, compare that with taking a loan from a bank and funding a real estate project. Let's say something goes and takes longer. The bank isn't going to wait for you to get that fixed, but by financing it yourself, you're in control of when and how you pay your own system back, whereas the banker is going to want their money right away. So there's that aspect of using the infinite banking system and process for your real estate. So it just puts you in control of when and how that money gets put back into the policy, which is part of the one big benefits of what we teach here.
So you're saying you have more choices, Craig? More choices.
You have a lot more choices.
Yeah, and then
Sometimes choices are not good. It's stressful. Sometimes you got a lot to figure out, and it takes time.
Well, I think what Jason's really meaning there is if I'm taking a loan from the bank and I found out there's a bunch of snakes in the wall. Now we need to rip out some walls and do some more work. Well, the banker wants his money, but I haven't rented it yet. So where's the cash flow coming from? Whereas if you're the banker, you're not going to force yourself to make a payment that month. I don't know. Do people have snakes in the walls? I don't know. Maybe.
I hope not.
I know. I was wondering where that came from.
All right. So Dallas is saying, when you request a loan, how long until it hits the bank account?
1 to 2 business days. That's what I've been seeing recently. Anybody else see anything different?
Yeah.
Well,
I think my last loan was like 4 days.
Yeah, 3 to 5 has been pretty average for the ones I requested. It's like 6 or 7 loans I've taken. So 3 to 5 days seems to be average.
I had a client.
I'd say that's for seasoned money, though, right? That's money that's been in the policy. But if you put a deposit in today, let's say you pay a premium today, it could be within 30 days to get the money out. But if the money's been sitting there, then yes, I would agree. It's 2-3 days.
I had a client actually it was a few months ago. They requested it in the morning and it showed up that afternoon. That's the quickest I ever heard.
Like they sent in the document, the loan request form?
It had already been sent in before. They did it before, but that was their second loan. It was so fast.
Wow.
Yeah. So I've never had it that fast.
Okay. The Donut Man 44 is saying, is it true you can only borrow from your policy what the interest is worth? You can't borrow like up to a certain amount of like 60% of 50,000 instead?
No clue what you're saying, brother.
This is horrible.
I like the name. I like the Donut Man 44, but I think the way you want to look at this, Donut Man, is let's say that you put $10,000 into the policy, day one. There's going to be, based on the design of the policies, there's going to be some percentage of that available to take a loan from. So let's just say 60% of that 10,000 is available within the first 30 days. That's what you can borrow. Now, as time goes on, and Derek Kaufman just posted something, we'll get to it in a minute, but this is the exact point I'm making. As the policy matures, you get to year 2, you can take a bigger percentage of what you put in and what you have growing. Year 3, it's even a bigger percentage. So at some point, you're going to get to what we call the money tree, which is when you put $1 in, you're going to be able to take more than $1 out. That's when you've hit your efficiency point in the policy. That could be year 2, could be year 3, could be year 4 or 5. Just depends on your specific policy.
Yeah, actually, Derek just said he just got his second year statement, and the total out of pocket for year 2 was $5,160, and his cash value increased by $5,800. So he had a money tree in year 2. How his was set up looks like, which isn't always the case, but good for you, Derek.
Yeah, it's
That's
awesome.
awesome. And that could be some of how Derek's been treating it, putting extra PUAs in and stuff like that. Learning how you can actually maximize the efficiency in your policy after it's issued. Some companies you can do that, some you can't. But really, again, committing to being a banker. Like Derek's a student of this. He's here every week. He's practicing it. He's using the policy the right way. So, or at least not the right way, the most optimal way. How's that?
Love it. And actually, so this will probably help you too, but Pansy Sleep is saying, which book is it again that's going to teach her about, or anybody about infinite banking?
So Becoming Your Own Banker by R. Nelson Nash. This is the GOAT. I mean, there's the Mapping Out the Millionaire Mystery by Mr. Noggle and Mr. Kessler, which is a great book, but this is the one. This is the one that changed my life. I think anyone on here would say the same. I think Brent's read this how many times? 107. Anyone here read it more than that?
No.
You've read it many times. You can start quoting like page 51 is the equipment financing model. So, and that's what Brent does. He treats it almost like the Bible. Well, you go to page 10 on section 4.
Like I kind of like that book is like the how of infinite banking. It explains like the technical side of it, but the why of infinite banking, I like the case for IBC. I like that one.
I actually do too, Brian. I was telling somebody yesterday who's read this one and was going to read Wealth Warehouse. I say before you read Warehouse of Wealth, read the case for IBC. I actually think that book is terrific. It's a really good book.
It's probably one of my favorites, if not my favorite, because it explains the why. Why should you do infinite banking? It's pretty powerful.
Okay, and then Navigate Your Ventures is saying, understand type 1 diabetes is uninsurable unless your A1C is under a certain number. Is there a way to do a term policy on a type 1 diabetic with no medical review and convert to whole life?
It's usually the insulin that is the issue, by the way. If you're on insulin type 1 or 2, I've had them say no to all that. But if you're not on insulin, the door might still be open, but you just got to kind of check. But that's been my experience with underwriting.
Shane, it would be really getting us all the specifics on this person, bringing it to preliminary underwriting and seeing what we could do. If their A1C is under 7, they might be insurable. I've had type 1 diabetics get offered insurance. Typically, it's going to be table rated. That's what's happened, at least with the ones I've worked with in the past that have got approved. But you have to explore that. And I think even if it's term life, you still have to get approved. So I don't see how they would do it without a medical review.
Yeah, agreed. The case for IBC. Somebody asked that question right now.
The book
I
is
have it
called
over
The
here.
Case for IBC.
El Puma. Yeah. IBC, infinite banking concept. Yeah, the case for it. Case for
Oh,
IBC.
Puma. What a sick name, too.
Yeah. The Puma.
Okay. Oh, yeah. And then Shane was saying, asking, because I heard no medical exam. Okay, we already got that, right?
Yeah, but I mean, in those cases, those term policies are usually not convertible or not accepted. So, yeah.
James Davidson. Hi, Jamie. It was saying, how long is a medical exam good to use for additional policies?
6 to 12 months, but up to the underwriters. So they typically say 6 to 12 months, but it is up to the underwriter on a case by case basis if they will allow the exam to be accepted.
For example, like if someone took a policy now, and if that initial policy put $500,000 of death benefit on their body, okay, and now you go and you take another policy, and now your amount of insurance that you're carrying on your body is well over $2 million.
Yeah.
You're most likely going, if you didn't have to do a paramedical before, you're most likely going to have to do a paramedical now. Like there's going to be reasons and risk factors involved every single time, which is why it's all very specific to the person we're talking to.
Yeah. That's why it's not like a flat answer of just this much time frame.
Yes. And I think a lot of them are 6 months, right? I think I heard you say 6 to 9, but is it 6?
6 to 12. 6 to 12.
12?
That's what I asked them one time. That's what they said is 6 to 12, depending on the client. I have a client right now that's doing their third policy, and I think the first one was 9 months ago, and they don't have to do a medical. But all the policies are the same, though. That's what you're talking about, Jason. They're all the same kind of policy, so no medical. But if they were drastically different, then they might readjust it.
Yeah. At the end of the day, it's all about risk, right? It's all about, like, this is why the companies, they're not willy-nilly. I love saying that because it's a fun thing to say, but they're all profitable for all of these years consecutively since they opened their doors. And you guys, I mean, I think you all saw the Gary Brecka, the 10X Health, talking about that. And I didn't even, because I like biohacking, cold plunging, all that stuff. So he's always in my feed, and I didn't even know who he was really. And then I Googled him, and he's always talking about it. I didn't realize that he was like an actuarial scientist for like 20 years.
For the insurance company.
Pretty cool.
For the insurance company. And, you know, he was talking about it back in like the housing crisis, 2008, 2009, 364 banks go bankrupt. It's a financial mess. And he's like, guess what? No insurance companies went bankrupt. Guess what? Insurance companies have never failed to pay out And I looked this up to try to find if there's any discrepancy here, but a valid life insurance claim. And then he also talked about why is that? Because there's only one variable that they're accounting for, and that is when we're going to die. How long will they get premium deposits from Mr. Carson Herlian, Craig Yenny, Brian Fouch, Shauna Decker, Jason Sipple, and everybody here that has a policy? And they know when we're going to die. Like,
Did you hear him say like it's like within like a matter of like weeks they like know when you're gonna
Yeah.
like, I was like, oh no.
Don't tell me.
It's crazy. They told me I'd live to 121, so I don't know.
But the actuarial science of it, though, it's just fascinating. It's all about risk. Like if we just start thinking logically about the big picture, and like one of the things that the woman who just went through her course, right, Lisa, went through, it's going to be about the law of large numbers. They talk about that over and over and over again as you're getting licensed. And that's what we're talking about all the time. Think long term, think about what's going to happen and the long outcome, all those things. So
the donut man came back and he said, just to be clear, whatever I put in out of pocket for the year is what he's thinking. So how much would you be able to take for a loan?
That's going to vary year by year depending on the policy structure. So that the best thing would be to do is to look at an illustration just specific for you, and that would show you what that would look like year by year, because it is different for everybody.
And generally speaking, and I'm just going to put this out, it is a general number. If you look at the cash value of what you have right now, you can typically plan on about 90% of that. So I'm not saying if you put in 10,000, you're going to get 90% of that. If you put in 10,000 and your cash value shows you have 6,000, you'll be able to get about 90% of that 6,000 out as a loan. So that's
why 90%, Craig?
Well, there's always a little bit of a fragment left in the policy. They're not going to let you take 100% of the cash value, but that's it's typically about 90%, and the 10% will stay.
Well, why do the insurance companies do that though?
Well, what do you mean? Why do they do that? They don't want you
90%.
Do they do it so that like in the event you were to like lapse a little bit, they have like a little bit of a buffer?
Yeah.
Well, that and interest too. I mean, some of them do hold the interest back as well. So like that's why I say 95%, because if it's 5% interest, One America holds that out of the available loan amount.
Almost giving you a little bit of a rope to keep it alive if anything ever happened.
Yeah, and here's an interesting fact for our community. Why did policy loans even get started in the first place?
You mentioned
In the 1830s?
nope.
Yeah.
Oh, to not lapse?
It was in the 1800s, but they did it so that people could take a policy loan to pay their premiums if they couldn't pay the premiums.
Yes.
1848.
Because it was
I knew
such
it
a
was
valuable
1800
thing
something.
to have that they wanted you to still be able to somehow have it.
I memorized it because it was such a fun fact. I'm probably getting it wrong after I tell you I memorized it, but I think it was 1848 for that exact reason. And I always joke around, like one of the things you'll hear me say on a lot of my calls is, you think people had better money habits back then? No, we're humans. We have terrible habits. We have terrible money habits unless we start really intentionally creating them. So
Yeah.
And then to that point, Lisa's, saying that she's confused about how long she'll have to pay the premium. And once you understand, it is like forever, but once you understand it, you're going to want to do that. You're going to feel more comfortable being locked into that.
And Lisa, we're talking tomorrow morning, so we'll kind of cover that on your illustration specific for you. But I typically tell people, it says, minimum you want to be able to fully fund the policy 7 to 10 years. That's going to get you the most optimized policy moving forward. And then after that period of time, you can choose to go to 40% or 0 if you want to. But what Shauna said is, once you see how the policy grows when you do fund it, you don't want to stop typically putting money into it because you're getting such a high growth out of it. If you go down to 0, it's going to slow it down. So I always ask people, I said, would you put $100 into an ATM to get $200 back out of it? Absolutely. So
especially when you're old. You know what I mean? Like, you want to be putting money into an ATM that's spitting out twice as much. When you're an old person, you want that.
Yeah, because it's tax-free income. So we'll go through it tomorrow morning, though, Lisa, for you.
And then Leah is saying, I've asked before, but what is the best bank to go for first lien HELOC on investment property? I need cash to buy a foreclosure.
The only one that I know that will do a first lien HELOC on investment property is CMG Mortgage.
They're out of California.
CMG. The guy I work with is out of California, but I don't know if that's where the company's based.
Gotcha.
So check out CMG Mortgage, Leah. They will do first liens on a investment property.
Cool.
Okay, and then Derek Olson is saying, how do most people decide what is an affordable amount to pay into the policy every month? And then by percentage. Maybe like a percent to their income, like how do they decide what their bank is?
What's our favorite answer? It depends.
I would say it depends. I would say conservatively 75% of what you save. Something like that. Depending on who you are, what you invest in.
So, and it does come down to the depends, but 15 years ago when I got my first policy, what I did is I quit funding my 401k, just quit funding it. I took all that money and started putting it in my policy. But, if you read like the, oh gosh, what's the book I'm thinking of right now?
Richest Man in Babylon.
Richest Man in Babylon. That is so it. That is so creepy. Yeah, Richest Man in Babylon. They talk about saving 10% of your income. So that, you can go down that path, but if you can't do 10% savings now, you're not going to be able to put 10% in a policy.
Yeah. Good point.
And then a lot of times we'll look at it too. Let's just say, for example, and Derek, I don't know if this is your situation, but let's say you have credit card debt, car loans, maybe some personal loans. And just as an example, let's say that you have a credit card and you're paying $500 a month towards it, but your minimum is $100. We could potentially look at taking that $400 extra, running it through the policy, and then taking the policy loan and throwing it at the card. So now you're capturing a little bit of that money that would have been otherwise going out the door. So there's a lot of things we can do to kind of look at your specific situation and then figure out what makes sense.
And I would say, Derek, another piece of it would be kind of where you're at in your journey and your confidence. Like, let's say Craig was putting $2,000 a month into his qualified plan. I don't know what the actual number was back then. He's putting in as much as he's able to put in there. And then he finds this. And he's like, you know what? I really never understood this anyhow. It never seemed like a good idea. So I'm fully in an IBC. So I want to jump in the deep end. I'm going to put all 2,000. Or like if you're newer on the journey, you haven't, you're not coming here saying I have to do this. It's kind of new. You're thinking, oh, this sounds like a good idea. I want to do this, but I'm not really sure. I kind of just want to dip my toes in and see if it's for real. Are you guys for real? I don't know where you guys are, right? Like, I don't know who you guys are and how this works. So maybe it's 1,000, maybe it's 750, 800. Like, it's just a number that you're comfortable with, that you're dipping your toes to prove to yourself that everything we're telling you works exactly like we tell you. And then once you see that, then you want to put the rest in, which is okay. Then you have 2 policies. So
I love that. That's exactly right. That's exactly how I felt every time I was deciding on my number, was pretty much in that way. Knights of Israel saying, can I get a list of the best insurance companies to work with for IBC? And to that point, Leah chimed in for us and said, in my honest opinion, this team is the best for structuring a whole life policy to implement infinite banking. Their support is incredible. So
there's 2 parts of that question. So the companies that we work with and the people that build the policies, that's 2 separate parts right there. The first answer is, One America, Lafayette Life, Security Mutual. Those companies are ones that we prefer to use. They have the good products that we like, but depending on the client, it might be a different company. Like I went through that with a client today. He has some certain requirements, and that is one specific company versus the other one. So knowing how to build the policies with each company is a big part of it. And that's why I appreciate, you know, what Leah said, because that is true. You have to know how to build them with each company.
And then I'm going to add it to the bottom of the screen. But to book a call with our team, you go to mentors.beyourownbanker.com. So, like Brian said, we're the people that build it, and we work with the companies that are going to best serve you. Oop.
There we are.
And then I think I only got one question left right now. David is saying, can I transfer ownership of my policy to a trust?
Yes.
Yes, you can.
And I would say when I get this question, and David, you probably already know this, but for our audience, there's really three main players in a life insurance policy. There's the owner, there's the insured, and there's the beneficiary. And only one of those can't change, and that's the insured. You can change the ownership, you can change the beneficiary. So those are the pieces that could move around. You may want to keep the ownership as yourself, and maybe the trust is the beneficiary. So those are some options for you.
Thank you, Craig. I've never heard it said that way, and I actually will take that and use it when we talk about having more choices. There's another way you have more choices.
Yep. Someone's got some fun music.
That would be my wife calling me, wondering where I'm at.
Yeah, where are you?
In a parking lot.
He's not in his barn. You could tell, right?
Yep, exactly. Yeah.
All
Is
right,
it warmer? Is it warm in your vehicle? That's what I've been wondering. Are you just in there because you were freezing?
Well, no, I was out doing physical therapy for my shoulder, and so I was just got done with that right before this call. But yeah, it's definitely warmer in this than it is outside. It's 34 here, so it's actually warmed up.
You say that so casually.
Mr. Carson sitting in 70 degrees. Yeah.
You should have saw Patty yesterday, Carson. When she went to Taekwondo, she put on her actual ski jacket with the hood with like the fuzzy things, and it was like 58 degrees. I mean, it was 38 yesterday morning here, or 36 or something like that. But
That's
like
cool.
by the end of the day, it was warm, and she like had the hood, and she went in. Everyone else had like sweatshirts on or t-shirts on. They're like, Miss Sipple, what's wrong with you? So
That's funny.
doesn't do cold well.
I get it. Any other questions, everybody? Are we good for today? There we go. What do we got? Damien.
Oh, just on his way from Japan. Okay.
Damien's here a lot. So I can
yeah, getting it.
hope you're doing well for this
Happy
new
New
year. This is our first show for the new year, right? We didn't do this last week.
Yeah.
Oh, I love this last comment right there. That's awesome.
Ray Bon is saying policy is in force in the second year and the cash value is exactly the guaranteed. Like, so just like the illustration says.
But not the non-guaranteed.
But wait a minute, there's more to this.
Yeah.
What I'm seeing is that they didn't get a dividend.
That's what I was going to say right there. Like,
yeah.
So Ray Bon, who set it up for you?
Yeah,
What
what
you
company?
did it with? That'd be the question right there.
You set this up with us, and what insurance carrier too?
Yeah. So one of the things that could be going on here is if this was not set up with, say, our team and it wasn't set up for infinite banking,
Said the money multiplier.
100% of your premiums could be going into buy the death benefit, and you may not be getting, dividends or much cash value growth on it for the first several years. So,
Well, he said TMM, so I would reach out to your money mentor.
And
go ahead.
I'd be curious too. Like, how have you treated it the way it was set up? Has it been funded the way that was set up? Are you
Any loans?
Yeah. Are you sure you're looking at the information correctly? Have you got with your implementation specialist to ask this question? We definitely will support you through it. It's a definitely curious scenario.
Yeah, I never hear that.
Yeah. There's probably an explanation for what's going on, but yeah, just get with if you don't have an IT member, reach out to your original money mentor and we can get you some help.
Yeah, because One America or American United Life definitely paid a dividend last year. I was looking I just had a bunch of unopened mail and was looking at it and saw what my dividends were. So you definitely got a dividend.
Yeah. Looks like they've got a pretty
Information.
decent policy design, so we would just need to see what's going on there.
All right. That's it.
Beautiful.
We did it.
We
We're
did
so
it.
good.
First one of the year. 51 more to go.
All right, I'm ready. You guys ready?
Yes.
Let's see if Steven should grow his beard the entire year.
Oh, he shaved it already, didn't he?
That ain't happening.
or should I grow out my hair the whole year?
I thought you were, man. Look at that
Go ahead.
flow.
Dude, it's long.
I was talking to a client that they do beard products, and we're talking about my scruffy beard, and said they're going to send me a little care package. Just said, I can guarantee you once you start using this, you're going to keep your beard all year round. Because I usually shave it off around March, but we'll see.
No, you're going to turn into my father. He used to, when it first frost, would let the beard start growing. And the first cardinal, he would shave it. And he did that for years. And one year he just stopped shaving. And he looked like Duck Dynasty guy until the other day. He actually like trimmed it across like this. But don't do it, Craig. Don't do it.
Oh, and I see that you provided Leah the link. And Leah, if you want to reach out to me, I can always connect you with the people I know over there too. Either way is fine. If you hit that link, you'll find someone, or I can point you towards the people I work with. Send me an email to craig@chrisnoggle.com if you're interested in that option.
Cool.
Excellent. Well,
Wonderful.
who wants 3 minutes back of the first show of the year? We do. Bye, all.
Time.
Until next week. We'll see you next week.
Happy New Year.